talking about overseas investments, and one of the interesting things that I noticed in your note, you talk about the strategic shift from going after natural resources to now going after infrastructure projects, and the Pakistan example is one, the $46 billion China-Pakistan corridor. Do you think that there could be an opportunity here for India to engage with China?
Well, you would think it's like a natural link, right?
Yes,
India
the Prime Minister says they're natural allies. I don't know about that, but do you believe that there could be deeper engagement on that front?
I mean, look, I think the incentives are there. Like, China has all this excess capacity in kind of industrial raw materials. Now, some of it they can still use in China, but clearly they could get a big bang for their buck if they can invest overseas. You've got all these Chinese construction engineering capabilities that if things are slowing down, you can provide overseas investment opportunity. And for India's case, obviously, it needs infrastructure. So it's kind of a win-win situation. The tricky thing is always kind of working out the details because, obviously, the infrastructure requires a lot of implementation and execution. And those things are not very straightforward. It's so much easier for China just to kind of, ask its local government to go build like a railway. But doing it cross-border requires a lot of coordination and diplomatic efforts, which is why I think these kind of cross-border kind of visits, these diplomatic visits are very good in kind of creating the kind of path for this to happen. But, I think this is the strategy going forward. I mean, I think China has already laid out its plan for, sort of Silk Road plan, trying to develop Central Asia, Southeast Asia. And there's been a lot of announcements, aside from Pakistan, I think they've gone to Kazakhstan, Belarus. And, I think India is obviously a very important strategic ally as well with lots of opportunities. So we'll see how it goes. But the tricky thing always is execution.
Yes, right? The devil is always in the detail. And infrastructure has never been India's strong point. So
see, the problem is Asia has plenty of capital. It's just utilizing the capital is always a challenge.
Speaking of other emerging markets in the Asian region at this point in time, we've spoken extensively about India and China. Which are the other markets that look attractive from a growth story point of view, from a structural reform point of view?
From a growth story point of view, I think if you look at Asia, you kind of have to distinguish countries that are very high income already. Because, obviously when you're very high income, it's hard to grow. Which is why, some of the North Asian countries have a bit of challenge, or Singapore is a bit challenging. But I think where there's a lot of opportunity from a demographic and lots of room for productivity growth and catch-up, you want to look at countries like Indonesia and Philippines, right? So aside from India, Indonesia and Philippines are, again, those populous nations with lots of underinvestment. I guess at the moment, when you look at our growth forecast, the country that is doing better has been Philippines. Partly because it's not a current account deficit country. It's got surplus, it's got domestic savings. It's pretty insulated from the rest of the world. It can fund itself. It's just a matter of execution, right? So I think Philippines, we have an above consensus growth forecast, 6.7. I mean, Indonesia's having a bit of a structural challenge because, even though there's a lot of long-term potential, it's still a current account deficit country. It has to restructure its economy towards more domestic, kind of manufacturing sector away from commodities. Those things are not easy. Just like India, it needs a lot of infrastructure. But that's where a little bit more the longer term. Right now, I think, if anything, growth has kind of disappointed at this juncture.
Speaking of disappointments, it's 1 year for the Modi government in office, and foreign investors, or investors in general, both domestic and foreign, seem to feel that some of the luster that was being talked about when this government came to power, that has started to taper off, has started to wane. Do you believe that there is legitimate concern at this point in time at the pace of reforms, or do you think that this is a large country, it's a complex democratic country, and it takes time to push structural reforms?
No, I totally agree with you. I mean, I think that it is a very complex country. I think the problem with India is that it was just overhyped. And in a way, the markets overloved it and everyone overpositioned for it. And you know how it is. Investors tend to have this herding behavior. People love the equity markets, the FX, fixed income, everything. And I think what's happening now is it's not like things have dramatically surprised on the downside. Yes, reforms always have 3 step forward, 2 step back. It always happens. But I think because positioning was very crowded, and what's happening is you're seeing other stories kind of crop up that maybe have potential upside. That I think there's been a bit of a rotation story.
So capital is being reallocated to sectors or countries where you were not invested. In India, typically everyone has been overweight at least as far as 2014.
So like North Asia, people have been looking at, especially China, if we get a little bit more of this easing traction, for example. And there was a little bit of worry in India when oil prices started to rebound. Like you don't want and of course that situation with the minimum alternative tax issue. So there was already a bit of nervousness on positioning and rotation, and then you had a little bit of kind of noise that have been coming out that made people nervous. But personally, look, I think the longer-term story hasn't changed. These things happen in terms of fund flows. I mean, people just position, once in a while you get a little bit of volatility. It's quite normal.
Speaking of volatility, at this point in time, you don't really anticipate global crude prices to spike substantially from the current levels. This is perhaps a temporary rebound that we're seeing, and we don't know what the Fed will finally do, if it acts in September or December, and how much. But what would be the other global growth concerns to your mind?
Well, I think China is still an
issue. The big one. Yeah.
So I think right now we are seeing a little bit more action. I guess the question is, do we have enough confidence that growth is already stabilizing? And we're not quite sure yet. I think we're still worried about the drag from kind of local government finances and how much that will pull back, aside from excess capacity that they have to deal with. So I think China, the pace of the slowdown is something we need to watch. We still need to watch the Grexit. Even let's say, of course, even in the case of U.S., although right now we are a little bit more kind of dovish in terms of the timetable, and even the market, even though maybe they're a little bit earlier than us, the market is a very kind of complacent kind of pace of rate hike. But any big surprise is something, whether it's more hawkish or not, is something that we need to watch. And aside from that, I mean, politics is always something that we need to watch out for. The geopolitics of the world is always something that creates some noise. Maybe that's one thing that could be a risk to commodity prices like oil, but that's not our scenario. And then the other thing I guess is worth pointing out as a risk is, for the last year or so, we've been kind of blessed that oil prices have been very benign, and actually food prices have been really benign. So again, that's why we got a little bit nervous in India when we heard that monsoon may be below kind of normal. If we get any kind of external shock, say a weather anomaly, again, that could also be another recipe for potential volatility in terms of, because we had this very complacent kind of dovish environment at the moment because of inflation. So food prices is something we need to watch.
So ratings agencies are watching the India story very closely, and Moody's has just revised the outlook to positive from stable. But in terms of the unfinished reform agenda, in terms of future and further structural reforms, what is it that you believe India needs to do in order to move from a ratings outlook to actually a credit rating?
Well, the big story has been land acquisition, right? At least it has a very, I think with infrastructure being such a big bottleneck and land acquisition having such a kind of strong, important implication for infrastructure, I think that's one key reform we need to look at. And of course, we also need further clarification on these fiscal reforms like GST. Rating agencies tend to care a lot about the fiscal stance, and we've already seen very big steps by India in terms of deregulating fuel prices. That's been very positive. They're now moving to sort of this targeted subsidy, cash transfer. There probably could be a little bit more reform to be done on this. But the other thing you need to do is really kind of, have a more kind of broader kind of tax base. And I think GST reform is one thing that's very key to watch.
Well, absolutely. That's perhaps going to be the most ambitious tax reform, and we hope that it does meet its April 1, 2016 timeline. Johanna, it's been a pleasure speaking with you. Thank you very much for joining us on CNBC TV 18. Thanks very much for your time.
Thank you.
Well, on that note, it's time for us to wrap up this edition of the Asian Tigers. From all of us here, goodbye and many thanks for watching.